Before we get started, I need to make this absolutely clear. This video is for educational purposes only. It is not financial advice. I'm not your financial advisor, and you should always do your own research and consult with a licensed professional before making any investment decisions. All right, with that out of the way, today we're tackling a really interesting topic: Bitcoin versus Bitcoin ETFs. Should you buy Bitcoin directly and hold it yourself, maybe even in cold storage? Or should you buy a Bitcoin ETF through your brokerage account? Let's break down the pros and cons of each approach so you can understand which might fit your goals better. First, let's quickly clarify the difference. Bitcoin itself is the original cryptocurrency. If you buy it directly, say through an exchange, you can transfer it to your own wallet and even keep it offline in what's called cold storage. This means you literally hold your own digital money without relying on a third party. A Bitcoin ETF, on the other hand, is an exchange-traded fund that tracks the price of Bitcoin. Instead of holding Bitcoin yourself, you buy shares of the ETF, just like you'd buy Apple or Tesla stock. The ETF itself holds Bitcoin, or in some cases futures contracts, and its value moves up and down with the price of Bitcoin. You never touch the Bitcoin directly, you just own shares that represent exposure to it. Let's start with the benefits of holding Bitcoin directly. When you hold Bitcoin in cold storage, you truly control it. No bank, no broker, no government intermediary. That's the original vision of Bitcoin: financial freedom outside of traditional systems. You can move Bitcoin across borders instantly 24/7 without needing a middleman. This makes it powerful as a global, censorship-resistant form of money. Unlike ETFs, which usually have an expense ratio, holding Bitcoin directly doesn't cost you ongoing fees. Once you've bought and stored it, it's yours. And beyond investment, direct Bitcoin can be spent, sent to others, or used in decentralized finance ecosystems. With an ETF, you can't do any of that. It's just a financial product tracking the price. Of course, holding Bitcoin directly has its downsides too. If you lose your private keys, your Bitcoin is gone forever. There's no forgot password button. Managing cold storage requires careful attention. For beginners, learning about wallets, keys, and cold storage can feel overwhelming. One small mistake can be costly. Depending on where you live, reporting Bitcoin transactions for tax purposes can be complicated. You're responsible for record keeping, and selling Bitcoin may take extra steps compared to just selling an ETF in your brokerage account. That could matter in fast-moving markets. Now let's look at the advantages of Bitcoin ETFs. If you already have a brokerage account, buying a Bitcoin ETF is as easy as buying any stock. No need to learn about wallets, private keys, or cold storage. ETFs are regulated financial products. Investors who prefer traditional finance may feel more comfortable with ETFs than with buying Bitcoin on an exchange. In some countries, you can hold ETFs in retirement accounts or tax-advantaged accounts, something you can't usually do with direct Bitcoin. And ETFs can be bought or sold instantly during market hours with just a few clicks. That's convenient for traders or investors who value speed. But there are trade-offs with ETFs as well. You don't actually own Bitcoin. You can't send it, spend it, or use it. You're just holding a financial product tied to Bitcoin's price. Most ETFs charge annual fees, which slowly eat into your returns over time. The ETF provider is holding the Bitcoin on your behalf. That adds a layer of trust. You're depending on them to do what they say. And Bitcoin itself trades 24/7 worldwide, but ETFs only trade during stock market hours, which means you can't react immediately to big moves that happen overnight or on weekends. So, which one is better, Bitcoin or Bitcoin ETFs? The truth is, it depends on your goals and comfort level. If you value true ownership, financial sovereignty, and the ability to actually use Bitcoin, then buying it directly and storing it securely might be the better path. But if you prefer simplicity, regulated products, and the convenience of a brokerage account, then ETFs could make more sense. Some investors even choose a hybrid approach, holding some Bitcoin directly for sovereignty and exposure, while also holding ETFs for simplicity and retirement accounts. At the end of the day, both options give you exposure to Bitcoin, but they serve different types of investors. One emphasizes control and independence, while the other emphasizes convenience and familiarity. As always, the key is to educate yourself, understand your own risk tolerance, and make the decision that aligns with your financial goals. Thanks for watching. If you found this breakdown helpful, hit that like button, subscribe for more investing content, and let me know in the comments. Do you prefer holding Bitcoin directly, or are you more comfortable with ETFs? I'd love to hear your perspective. And remember, this was not financial advice. Do your own research and invest responsibly. See you in the next video.